Hey guys, it's Matthew from Simply Trading here, and welcome to our very first weekly watch list on SPY. Now, the way this year ended was nothing short of spectacular. 2024 will be a year filled with opportunities, so it's absolutely essential that we develop a game plan based on logic to have you well prepared to capitalize on the opportunities ahead in this market. Now, if you guys want more of this content, be sure to hit that subscribe button down below and join us for live trading right here every morning at market open. Yes, it will be free. So with that being said, let's get right into the charts. We'll start off with the SPY monthly chart here. And, um, really everything about these past 2 months have been nothing but bullish. You've seen this nice large green candle here. No sellers whatsoever. It really does feel like bears have thrown in the flag, the past, or thrown in the towel the past 2 months here. You can see on a bar to bar basis, we have a nice higher low. So, I mean, from November to December, the lows are much higher than the previous month. Same with the highs. So bulls go 2 for 2 on the monthly bar to bar count. On the monthly chart, of course, we do have all-time highs as our last resistance, so that would be something to watch for on a monthly chart, which would be about the 479, 480 area. Going back now a little bit more granular to the weekly chart, see if we can find that. And you can see, right? I mean, it's been, I think, about 9 weeks of, or 1, 2, 3, 4, 5, 6, 7, 8. Yep, 9 weeks of straight green. And yes, we've been very, very strong. You can look on the bar to bar count, look at those nice full bodies. However, watch this last week here. Our bulls starting to lose steam. Now, yes, we go 2 for 2 again. Our lows and highs are higher on this week's candle relative to the previous week's candle, so the bulls are still in control. However, the nature of this candle, it's not as strong as it was on, say, these candles. You can see that by the nice large upper wick here. The body is okay. It's just a smaller candle relative to the other ones. So as we know, smaller candles equal smaller buying activity. Less buying activity or less selling activity. So, I mean, less volume all around. Now, could that be due to the holiday week? Absolutely. But nonetheless, it's something to be aware of. Of course, the market's still trending higher. Don't want to point to any sort of reversals, but that is a new piece of information that we do have today. Okay, so if we look here, I would say we do have our our supply zone that we broke here. I can get a nice little, where would it be? A nice little rectangular tool here. Can draw that nice little supply zone right there. And we broke that. We quite literally blasted right through that zone. And would it not be fair to say that we could potentially retest that zone? Typically, when we break large zones like this, especially very significant ones on a weekly chart, we do tend to come back down and retest them. So if we are going to get a retest, could something like this, be in the picture? I absolutely think it can be. Oops. No, no, get rid of this. That was terrible. Right here. Basically something like this, nice retest of the zone. I could absolutely see it happening. You have a nice area here between 460 and 462. If you look more to a bar on a bar to bar count, you look at that large green candle and it's sitting right around 459.50 to 460. So that's going to be a nice area on watch if we do start to pull back. That would be one thing I'd like to see on our weekly chart. So it'd be right about there, right on that nice big weekly bar. So with that being said, that looks good there on the weekly chart. I do like that as a retest level. Let's go ahead and look to our daily chart. What do we see there? We can get rid of this just to look a little more clear. And now on our daily chart, a little more granular. You can see our volume's been actually increasing here on these, I would say, indecision days. not much selling activity on these candles. We certainly got a lot here on this bar. So there's been a lot of liquidity coming into the markets at these levels. Does that tell us that a potential reversal, or at least a near-term reversal, is on the horizon? It could. It absolutely could. But with the strength of this market, you just never know. What I will note to you, however, is that we've been in this range for a few days, and we actually tried coming out of that range on the on December 19th before it followed a nice big bearish engulfing candle. And then what happened was you had some new money shorts probably at the bottom of this wick here. They didn't get follow through, and those stops just got massacred, pushing the price higher. However, with that being said, we ended the year off holding just above that range. So should we want to continue higher, what you really want to see here is we can get our nice little where was it? Our pathway here. What you want to see if you're a bull, you're looking for long side opportunities, you want to stay above this range. You don't want to go beneath it, because what that does is it shows that the buyers ultimately failed to break above that range, so their stops will likely be hit and cause a move like this. Basically, pop back into the range, retest the top, looking for the bottom of that range, and potentially back down to 464. Or I would say 460 was our weekly level. And we can highlight that as our red scenario. So the bears are going to be looking for us to not be able to maintain ourselves above this range, looking for downside. And that would be primarily below the previous session's low, which was about, if I can see here, 473. So below 473, we can look to get a little more cautious from the long side. We can look more to short opportunities. Above 473, however, it still does ultimately look bullish. We do not want to play it counter trend for the time being above this range. So that's our daily chart here. Again, you can see that volume is starting to rise. It is obviously something of concern for any sort of new money longs. We don't want to enter right away. It certainly looks like we're entering at the top, but of course the trend can always continue, and you have to know the path that the price can take for a higher probability long or a higher probability short. Getting a little more granular here now on the 4-hour chart. I mean, some people, well, have noted a rising wedge pattern. Something like, I would say something like this. And I think actually some people had it like this. And, from that perspective, it actually looks pretty nice and clean. You can see we broke below, came back up, and are retesting that trend line there, that support trend line. So if that does follow through and we create a lower high off that level, we're going to need a new lower low to confirm that as a new lower high. So again, just more confluence to the short side move below 473. If you actually get rid of this rising wedge pattern, however, and let's go all the way back to when this big bull run started right at, I believe, the end of October, and you can look right there as we extend that trend line way out, and you come all the way up, and you can actually see that we are also breaking just below that trend line now, retesting it potentially as a new lower high. But like I said, for that lower high to be valid, you need to break back below 473. There's going to be a lot more confluence to a short side move there. And it's especially something that's required if you're going counter trend. You want to make sure a bigger trend line is broken. And you want, I would say, at least 2 to 3 signals pointing to this move, because, of course, this market has been extremely strong up to this point. We do want to see some more confluence. But yes, a pullback is needed. And below 473, I could certainly see that happening, with targets probably back down to this 468, 467 level. And then, of course, you can't hold that. We're looking back at the FOMC lows at 464, and then back to that big weekly level at 460. That's going to be my big level on watch there. So that's our 4-hour chart. We can look a little bit more granular on the 1-hour chart. Again, I do have that actually, before we go to the 4 hour chart, let's go back to the daily. There's a big level I'm watching. I would say about 478. You can see why I like 478 as a short, potential short, because if you take a nice horizontal line here and you put it right about there, you can see all the interactions we have with that level. The last time we've interacted with it, of course, a couple of years ago, or a few, I would say about 2 to 3 years ago. You can see we're right at 478 there. You can look at all the interactions with that level and look at all the downside we've seen from that level. So 478 is a big level on watch on our daily chart. So if now I go to the hourly chart and combine with that larger term trend line that we just drew on our 4 hour chart, there obviously is a really nice opportunity for a short right about there. So that would be Tuesday session, looking roughly between anywhere 7 to 8. So I guess the first couple hours of the market session, we could see something like this facilitate. So I would not want to actually go long if we're right near 478 in the morning. That's a nice area that could see the potential for a morning reversal just because of the significance of a strong daily level. But typically, I would say above 476 here, we can still look to long opportunities, but I probably would not hold for a long time just because we do have a significant level coming, and of course, a lot of liquidity we're seeing at these levels. It's a little bit riskier. So I would definitely size down in this area, see some more confluence. I would like to see the bull parade continue, of course, likely above 480, where we start seeing new all-time highs. So that's pretty much it here for SPY. It's really about, yes, I am excited for the bull parade continuing. I do like seeing stocks go up, but of course, we can play it to both sides. And we do have to remember that if the chart is telling us that we're seeing a reversal, we have to play that reversal. If the chart's telling us no, we're just going to go straight up, we're going to just go straight up. So if I look at the chart, and by the way, the 5 minute chart's the only chart I execute on. You can see here, of course, I would like to see us back above this higher. Well, this chart is showing us a new potential lower high. That lower high would be confirmed below 473. So if we're to see some sort of reversal, I would like to see us pop back above 476 for some upside. So for tomorrow, I would really like to see something like this if I'm going higher, or I'm going to aim for from a long position. We can label that green. If we're looking at a short scenario here, I'm probably going to want to wait until we can get maybe a sort of move like this back into our daily range, as I said. So it would be that would be our bearish scenario back below these lows. That would be sort of what I'm looking for here. A little more neutral in this zone. I would be cautious. I would probably be looking only for very short-term scalps. So you're not really looking at home run plays in this area right here. You're looking at more upside, downside areas outside of this zone. There's a lot more confluence to it, and those are the areas you really want to wait for. That's where the bigger liquidity is going to come in. So I hope you enjoyed this analysis. I mean, if you guys do want to learn how to trade independently and perform multi-time frame analysis like a professional trader, be sure to check out my ebook. It's on sale for $19.99, covering topics from candlesticks for beginners to the strategy itself and how I execute it in real time. The link to that, along with a free sample of the book, is in our bio down below. I wish you all an amazing new year, and we can't wait to see you tomorrow for our first live show. We'll be very excited. So see you guys then. Cheers.